Welcome back. Let's talk business now. Indian benchmarks end lower for the second consecutive session today amidst weak global cues, with investors shifting focus to the US Fed interest rate decision. Meanwhile, as many as 33 stocks ended in the red in the Nifty 50 index, with Hero MotoCorp, HDFC Life, DV Labs emerging as top laggards. My colleague Hiral Daria joins us with all the market action. Hiral?
It's an absolutely interesting week of trade that we witnessed. Though we've ended the week in the positive, but the last two trading sessions, we've seen absolute selling pressure in the last hour of trade. In fact, there was profit booking that started to creep in. Today's session, if you see HUL, Infosys as well as SBI were the key drags. And you had the Nifty, which ended below the 18,600 mark. Whereas in terms of the Sensex, we saw a downtick of nearly little over 200 points. For the week, the markets have seen an up move of almost around 0.7%. In fact, in today's session, the broader markets clearly outperformed the benchmark indices in trade, and the breadth on Nifty 50 was pretty much in favor of the bulls as well. From a weekly perspective, clearly the mid-cap index has gained. However, it's the small-cap index which lost nearly almost 3%. So you know where the entire action that is happening so far. FPIs and DIIs have remained buyers during the week, so that's interesting to watch out for. Let's quickly look at the top gainers: IndusInd Bank, Power Grid, Axis Bank, L&T, as well as Adani Enterprises. These were the top gainers on Nifty 50, whereas on the losing end, you had two auto names: Hero Moto, Eicher Motors, HDFC Life, Tata Steel, as well as Divi's Laboratories. Another stock that we need to note is IEX. The stock hit a 52-week low. In fact, it also dropped to a 2-year low, and this is after the Power Ministry has mulled market coupling, and that could be negative for an IEX. 2 sessions of a downtick. VMart also was another one that hit a 52-week low in today's session. In terms of newsmakers, the sugar pack was in focus today, and this was mainly on the back of the US sugar futures that did see a good up move, and that had an impact on the Indian ones as well. Cement stocks were up and about in trade, so you had the likes of India Cement, JK Cement, Ultratech Cement. The entire pack was buzzing in trade. In terms of other newsmakers, you had a SBI, where the board has approved fundraising of around 50,000 crores via debt instruments. CMS Infosystems took a beating after a large trade. IRB Infra surged, and this is on the back of a 20% up move that they reported in terms of toll revenue growth for the month of May. Greenlam as well, they've opened a new plant in Tamil Nadu, on the back of which we did see smart moves on Greenlam Industries. Bansali Engineering Polymer declined after going ex-date in today's session. Macrotech developers, you did see an ICRA upgrade that came in terms of the rating, and that was positive for the company. Aether Industries has hit a record high, and this is after they've inked a pact with Saudi Aramco. Kotak Mahindra Bank was under pressure as Canadian pension fund investment has offloaded 1.7% stake in the bank. As well as you had Zomato, Brighton, as well as Suna Vineyards. These were few of the other newsmakers in trade today as well. So overall, if you go to see a lot of newsmakers, a lot of stock-specific action is what you witnessed. Last 2 days, you have seen profit booking in the last hour of trade, but the analysts are of the opinion that the underlying tone is positive and that positivity could continue. You could see these bouts of selling pressure that could come in, but overall it's going to be interesting to see as to what is the market going to look like, because next week you have the Fed that will be keenly watched out for, so there could be some bit of consolidation that could continue till that point in time. That's all that we have in terms of what markets have done on a Friday. Back to you.
Many thanks, Hiral. Let's move on now. Chemicals and tech may emerge as the dark horse sectors in the market and might end up outperforming their peers. That's what is being said by Ambit Asset Management's Sushant Bansali. He also believes that capex undertaken by chemical companies and valuation comfort for IT will fuel the sector rally. Listen in.
So there are 2 sectors where we would say that the dark horse thing can play out.
Okay.
One is chemicals and the other is IT.
Chemicals?
Right? Yeah, chemicals and IT. Chemicals have not participated, if you look around, for last 2 years.
Yeah.
At least, right? And they participated quite well between 2017-18 till about COVID times. Right? Pharma also has not participated, but the The global business, we are not yet fully comfortable. Chemicals is something which we believe it's more investors' view of how things have played out than the real franchise value of most of these players. If you look around, they have been able to pursue the capex. Most of the players, at least, have been able to pursue the capex which they announced, looking at the great demand which they were expecting for the next 5 and 10 years. Which means if the capex has been done, the revenue shall follow, because most of the capex does happen basis, I would say, contracts with customers, right, which are not probably fully dotted and signed, but are probably well in pipeline, and that's why the capex has been done. So chemicals is one sector where we believe that it can be the dark horse for FY24. And IT, I would say that valuations do give comfort, and but IT is not that hard horse as compared to everybody. It's not a contrarian bet, I would say. Many investors probably are happily accepting the fact that the valuations on IT companies are very reasonable, and in this market, when as Nifty and Sensex are towards again their peaks, probably they give more comfort than many more sectors on the valuation side. The growth trajectory might not be that great for the next few quarters, but timelines beyond that do I would say investors a good reason to invest into these franchises.
Now, in its latest circular, Power Ministry has directed CERC to start the market coupling process for the power exchanges. Remember, market coupling refers to forming of a single power trading entity owned by the government. My colleague Vikas Srivastav joins us to tell us more about the circular. Vikas?
Yeah, as you are aware that Ministry of Power has asked CERC, rather directed CERC to start the process of market coupling for power exchanges. So, there are 3 power exchanges in the country, and the grouse with 2 of them is that there is a monopoly kind of situation with Indian Energy Exchange, which kind of holds 90% or above market share, and most of the participants flock to the IEX. So, what happens under market coupling is that if there will be a determination of uniform price across the country, so there will be a single price, a level playing field, where both the and all the 3 exchanges will have the same price on the bid and sell side. So, what a market this coupling does is, or there will be a third party operator, what he will do is that he will get all the buy and sell bids or the orders together, aggregate them, and then match them and finally arrive at a uniform price. This uniform price will be applicable across all the exchanges. So, this has already been in prevalence in Europe. Basically 27 countries have been put under a same block, as well as there is a Nord Pool market, which is a pool of 4 markets where there is a uniform price which is determined for all the exchanges. What it also does is that it brings, or rather brings efficiency in the allocation of transmission network. So, if there are 3 exchanges and price bids happen for 3 separately, then allocation also happens separately, and at times there are overlaps also. So, to reduce this overlap and to allocate the exchanges, to allocate the transmission networks to these exchanges on region wise basis, it helps the market coupling as a mode of determining the prices. Going ahead, I spoke to a couple of these exchanges. They said once the consultation process will start, there are various other factors apart from pricing that needs to be worked out. Who will be the operator, who will be the and how will the prices determined. All these things will take at least 2 to 3 years before this coupling thing is already implemented and made as a proper policy. So, till then we will have to wait and watch.
Right, Vikas there with all those details. Now, many people have complained about repeated telemarketing calls pushing us to get a loan, which brings us to the question, how can you stop telemarketers from stealing your data? Digital lending expert Parijat Garg discusses this with BQ Prime's Alex Matthew. Listen in.
As we all know, for most of the businesses, the lead generation activity is top of the funnel, where the data comes from variety of sources and from variety of channels. And most of these players don't work with their own units, but they outsource this to various agencies who do this, and they are not under any kind of regulatory coverage. So this data can come from data brokers who buy this data from gray sources. This data can come from third-party databases, websites. We travel everywhere. I enter so many offices, and every office, the security guard asks me to list down my phone number there. And I don't know how that data is kept safe. Is the data getting leaked out to someone else? And there are so many such instances where I am leaving my footprint, and that footprint is gathered by such data brokers, and then it gets into these users.
Specifically when it comes to lending, what is the kind of information that a company would or a bank would have to have of the borrower, assuming that they are a first-time borrower, for them to make that call in the first place? Do they need that information to call you?
Not really. I think for the first time call, more often than not, it's just about phone number. If they have a name, that is good enough. They don't need anything else. They just try to call you and start that conversation. More often than not, every individual is in need of one or the other financial product. And for any diversified company which has multiple products to offer, for them, it is very easy to monetize that call because they'll be able to find one or the other need that customer requires at that point in time, and they will be able to service that. So that's how this channel operates. It's just that you randomly start calling, and it's just a 10-digit number, and that 10-digit number can be computed with the computing power that we have today. We already know the mobile number patterns. You can just generate millions of mobile numbers and start randomly putting it on dialers. And once people start getting calls, I pick that call up, I get into the conversation. If I'm interested, they start pitching me the product. If I just disconnect, they move on.
Well, that's it then today in Let's Talk Business. We are taking a very quick break now.